What's going on, everybody? This is Steve from AltCoin Buzz, and happy Sunday to you, end of the weekend, maybe even early Monday morning for those of my friends on the other side of the world. But we are diving in here to the crypto market today, and sad to say it, but after a sea of green and many weeks in the green, we're taking a red Sunday here with almost every coin in the top 100 seeing a decline in value today. And this could be many factors that go into it, of which we could only seem to guess, but only Tether and a few other ones seem to have escaped the sea of red. But this could be a buying opportunity for some of you that are looking to go with the ebb and flow, and it could just be that a lot of people have decided to take profits. But Bitcoin was very close to nearing the 10,000 price point again and seemed to meet resistance rather than support. And it's taken a step back now, closer to the 9,000 mark, but have no need to fear. We've certainly seen much worse in the past few months, and everything still seems to be up and up, so to speak, year over year. So one of the big things that seems to be taking a hold here, and this is the main subject of what I wanted to focus on right now, is that Japan is looking at instituting a crackdown on both exchanges as well as pretty much a blanket statement or ruling on anonymous cryptocurrencies. So this is going to really put a hamper on the Japanese yen contributions to the trading volume and the purchase and sale of many cryptocurrencies that are even within the top 100. And some of those that come to mind are going to be coins and currencies like Dash, Monero, Verge, and things like that. So Japanese holders that were looking at holding on to Dash as a cryptocurrency or Monero and their mining efforts that would have gone behind those are probably going to be quite hesitant about their investments in those currencies moving forward. But so far, even on the cusp of this news here, we don't quite see any worse for wear behavior amongst Dash and Monero. They, given an average of, pretty hefty single-digit losses for most of the top 10 coins, in the past day, it looks like Dash and Monero are kind of weathering the average there so far. And then let's take a look and see how Verge did. Same. I mean, that 5 to 8% still seems like in today's news that's probably just average loss. And they certainly could have done much worse if investors were speculating that the news of Japan was going to cause much more harm. But when we want to take a look and see, let's take a look at Dash in particular, because this is strictly a cryptocurrency. Taking a look into it, and privacy is really just one of its functions, and I'm sure that's one of its main appeals. It was built off of the Crypto Night, I believe, originally. Could be wrong, but at least when I looked into it, I thought that's what they had been built off of. But the market cap of almost $4 billion, it's pretty strong because it was closer to $3 billion not that long ago. But we want to take a look at what type of currencies and what exchanges are trading on there. There's been a lot of Bitcoin for it, but we've got Korean won and US dollars being some of the bigger contributors. Let's see if yen comes into play anywhere on there. Unless I skipped it, it seems like the Japanese yen is not really a major contributor directly, but it certainly could be a player on some of these exchanges that are being traded for BTC. And it could just be because Dash may not be exchanged directly for any type of fiat currency on those exchanges, which would be understandable and make it a little bit hard to track what type of countries were contributing to the daily trading volume of a coin like Dash. But let's take a step back into the news and take a look at basically what the Japanese markets are saying they're cracking down on. Because if we remember, back in January, there was a massive heist on CoinCheck, and they had lost over $500,000 of customer assets, all within one hack. So this has caused the Japanese markets to instill necessary rulings on the Japanese exchanges to help ensure that major heists like this don't happen, because this is not only bad for cryptocurrency, but it's also bad for the Japanese financial market in general, of which they seem to be imposing their regulation on. So one of the things I had seen was a proposal that customer assets would be stored separately from the exchange's assets. So that would at least mean that one exchange would not have all of their holdings of one type of coin in one particular place, making it all accessible to one hack, like what had happened in January with CoinCheck. That's certainly a good idea because it would make it a lot harder for somebody to hack multiple accounts, tens of thousands of accounts, what have you, to be able to heist a bunch of coins to the magnitude of over half a billion dollars of coins. So another key thing here too with this ruling from Japan is that there's going to be tighter know your customer rules. There's going to be tighter password requirements for large transfers of coins. And they're also going to require that any Japanese-based exchange monitor customers' accounts multiple times throughout the day for any type of unusual trading patterns or behaviors, which, for a small-time investor, it would be hard to say whether making multiple sales in any given day after you've only made a few purchases would be unusual. But I think that there's certain patterns out there that look more like criminal activity, aka theft, that they should at least put some more security measures in place, require multiple password authentications for large exchanges. And with this know your customer regulation coming down, making that a burden of the exchanges, it's also going to make it very hard for those exchanges to be able to understand and track any of these anonymous cryptocurrencies like Monero, Dash, Verge, and so on and so forth. So that means that those exchanges are probably no longer going to have to list those as an available coin. And I don't think it's quite hit those exchanges yet. I don't know if there is a set date, at least based on the news. And we'd also seen some information on this on Cointelegraph, if you want to check that out, where they reference some of the same information. All pretty much citing anti-money laundering laws for the crackdown on anonymous cryptocurrencies. But what do you guys think about it? Do you think that to me, I'll let you guys chime in for a second, but for me, I think that for the Japanese markets to come in and say they don't like anonymous cryptocurrency like Dash and Monero means that I guess they don't support cash transactions as well. So they don't think that brick and mortar businesses should be able to operate in cash transactions, because to me, anonymous cryptocurrencies really provide very little more security. In fact, they're probably even less secure than just having cash and making a transaction that way. I think it'd be a lot harder for somebody to trace an offline transaction that didn't have a digital signature or anything like that take place, or any type of transaction occurrence with time and date, locations, things like that. So I would say that unless they plan on cracking down on cash transactions and cash purchases in general across the board, there's really not a lot that I think they should be able to say to defend themselves on being able to crack down on anonymous cryptocurrencies. Because something like Dash is strictly a currency; it's not a platformer. From my conversations with the team at Dash, a few members of the team at Dash at least, they don't see Dash as being like a real long-term investment. Of course, you could take out a masternode, and that would be a different situation. But they look at it as being more like the checking account rather than the savings account, where those coins are meant to be purchased and spent within a relatively short period of time. And I know that's counterintuitive to what a lot of people are looking at when they're talking about investing in cryptocurrencies, because they're talking about hodling, they're talking about buying things and seeing long-term gains. But realistically, if people aren't using cryptocurrency, it's not going to pick up mainstream adoption. It's not going to be able to see a lot of trading volume. It's not going to have a lot of supply and demand. So it's going to remain rather stagnant. So, like, for example, if everybody that held Bitcoin today didn't sell their Bitcoin and was just holding on to it, you wouldn't have a lot of Bitcoin available for new people to purchase. And yes, that means that it would become very scarce and price would go up. So there's one side to that coin. But the other side would be that there really just wouldn't be a lot of utility in that coin in that case if it's strictly just a store of value. What is it a store of value against? And at what point, when people choose to liquidate that store of value, does it become have hyper liquidity and lose its face value much faster? So we've seen good things come about lately with the concept of the physical notes being issued by one organization for Bitcoin and things like that. But I just really think that the Japanese, although it's in the name of security, I think that there's a lot going on here that could be possibly just done in a different way. So I'd like to hear what your thoughts are there. Give a like if you support cryptocurrencies. And if you're one of the people that are really into Dash, Monero, and Verge, what do you guys think about this Japanese market? And what do you think that's going to do to your investments? I assume you don't live in Japan. Some of you guys might. But if you don't live in Japan, what do you think that this type of ruling is going to do to the value and the utility of your cryptocurrency if it's not able to be exchanged, purchased, and traded on those Japanese exchanges? And would other countries take suit and use this as an example to be able to crack down on that as well? So comment below. You'll get more videos from AltCoin Buzz here in the future. This is Steve. Stay tuned.